What if I told you there are stocks ranked in the top 100 that are trading lower than they were a decade ago? And what if these stocks are preparing to make their next big move up? Well, get ready because we are going to break down 10 cheap ASX stocks with a massive buying opportunity, highlighting the key price levels to watch for and the crucial triggers that could signal the start of the next bull run. We'll also give you our hot stock tip for the week, break down the huge news coming out of the iron ore space that could affect some of Australia's biggest miners, and as always, answer your questions. If you want to trade with more certainty than over 95% of traders, then you have come to the right place. Welcome to the Wealth Within's Australian Stock Market Show. With over 2 decades of experience training over 30,000 traders, we bring you what actually works in the stock market. I'm Dale Gillum, and joining me are Wealth Within's professional traders, Janine Cox and Philip Tortevsky. Good evening.
Good evening. Great to have you back. This is an exciting night, isn't it?
It is. They brought me out of retirement just for this. They dusted off the cobwebs and everything. I thought I'd let Phil have a bit of an easy night tonight.
Yeah, thank you very much. I needed one. But look, it's an exciting topic. Obviously, we're talking about stocks, as you mentioned, that haven't traded for prices they've seen since a decade ago. So, and big stocks too. So get ready.
Well, it is. It's like why we teach people don't buy and hold, because you can do this quite often on some of the big stocks. But anyway, okay, so let's get straight into it. Cheap growth stocks is where we start tonight. Now, Janine, I'll let you take it over.
Cheap growth stocks. Well, there's no such thing as cheap for a start. However, when stocks get to a level where their prices indicate, and this could be looking at some of the fundamentals and the technicals, of course, because we say that overrides the fundamentals. When stocks are falling, you have to remember that the fundamentals will not reflect correctly, and it takes a while for the dust to settle. So the charts always indicate where the strongest levels are, and that's really what we look for.
Interesting, because we do get comments on people saying, well, why don't you guys discuss all the fundamentals, but surely they're more important? And the answer is not necessarily, are they?
That's so true. I mean, the fundamentals, in the GFC, the fundamentals actually told us something, a completely different picture than what was actually happening. So a lot of investors were piling in when the fundamentals were saying that the stocks were cheap. But, you know, what was coming next, and that was the thing.
But they could always get cheaper.
That's the but.
Which is exactly what happens. Generally, fundamentals are generally lagging, and that's what I think what you're trying to say is that they eventually change, but the charts tell us first. But anyway, now's the time for some stocks, Phil, isn't it?
Yes, all right. So let's get into these stocks. Let's start off on your screen right now is the first one, which is AGL. Now, I mean, just to add to your point, what you were speaking about before, to quite put it, you know, as simple as possible is the technicals tell you when. The fundamentals don't answer the when. So if you can marry up a cheap stock, strong company, and get the timing right, then to me that's the winning formula.
Well, see, cheap, they think about penny dreadfuls and stocks that are trading below $1, but that's often what people are talking about in the industry, isn't it, when they're saying cheap?
Well, they're comparing cheap. They're looking at cheap in terms of a stock price, not whether it's actually cheap, what it's actually worth. But I know in terms of, you've got AGL, we're going to talk about right now, energy's the worst performing sector this month, and yet you guys have been bullish on energy. So
well,
you think that's
well,
the next
our mate
area.
who's not here.
Our friend who's gone off to Taiwan.
Blame Pedro, blame the guy that's not here.
He's but look, I mean, at some point, you know, if we do have to, I'll protect him a little bit because he's not here, but at some point, you know, we saw this with tech, we saw it with financials. At some point, these sectors that are lagging will become the darlings in the future.
Yeah.
So, you know, there will be that rotation, and looking at energy right now, I don't disagree with what, you know, Pedro there was thinking about. But again, it's about getting the timing right. It's always about getting that timing right.
Give him a big head if you talk him up.
Well, you got to look after him. But so let's get started on the monthly chart here. And to me, what screams out with AGL, obviously big stock, big company, been around, believe it or not, since the 80s, mid-80s. And 86 actually, a great year that year.
I was about to say, it was about when you were born.
But you know, looking at this chart through here, you've got obviously a big expansion with AGL, you know, had a fantastic period all the way from 1986 leading to 2017, where post that you saw an all-time high for the stock. And very much like what we speak about, that euphoric buying, which generally signals the end. The strongest buying for AGL was right near the top. So let that sink in. Following that was this huge correction we experienced down to that $5.40 level. And what's interesting now is we're starting to see not only one, but 2, 3, 4 higher bases for this stock. So, since 2006, the price was, $13. We're trading at levels that the stock was trading at higher 20 years ago. So this is why I think AGL is an exciting proposition right now, but it's all about lining up the technicals. And what I'll apply to this chart through here is, if I can get our momentum line, you can use some simple rules as you've got in your Bookdale, for a starter, to follow this momentum as it's running along. Because one question we can't answer is this going to be a long-term play on the way up? But it doesn't matter if we get the timing right. Because if we can measure our buy entry at a good spot and also have our risk to follow the trade as it's going along, then it doesn't matter whether it's a short-term, medium-term or long-term play. And I'll emphasise that on the chart there for you if we go back. So looking at this one here, if we can get through, where's our horizontal line on the chart? If we can make our head above $12.37, to me that brings the opportunity for the next leg up. The way it's consolidated, the way it's been in trend, the way it's holding lows, that spells opportunity. The only caveat I will put to that in terms of strong growth is this huge resistance you've got, or price agreements through here. This could hold the stock up in the short term, so a safer potential play would be somewhere above, I'll get the trend arrow, if the stock starts to find its feet or base above $13.23. That might be the safer medium to longer term play.
Correct me if I'm wrong, but right now, over the last sort of 12, 18 months on this stock, it's very similar to it coming out of its lows in the 2000s, in that early 2000s spot.
Yeah.
At that stage, people wouldn't think, get in the stock. But after that, it took off like a rocket.
Oh, yeah.
So at the moment, that's what we're seeing. And why we talk about don't buy and hold, but this is like even the best investment from 20 years.
Yeah,
really.
And that's why when you're looking at these big companies, it's so different to when you're looking at, as you said, penny dreadfuls. Because you look at a penny dreadful that experiences expansion and then starts falling away, falling down to near the all-time lows. More often than not, that company gets delisted or taken over or is not there again. These are big companies. So just like you said in 2000, it was a 70, 80% correction. We're seeing the same thing repeat again. So
could be a good stock, I reckon, Phil.
Yeah.
Another one?
Yeah, we sure do. Janine, did you want to take this one on?
ALD. Now, I'm not going to hang my hat on this one. However, because of the volatility and just because of this resistance, however, it has approached this really strong level, which, this is what Phil's talking about. Identify some of these stocks that have been in the declines that have come down to some really significant levels that may then turn around from these levels and provide some upside. Now, in terms of long term, I think this one's sort of more short to medium term in terms of the time horizon, but it could, based on history and showing what happens in the past when it actually bounces off a significant low, it tends to come up. That was 70% rise. Off this low just prior to it, it went up 70% as well. It's another significant one. Off this low here, another 60%. You can see the general idea. Now, when it was in beautiful uptrending fashion, it actually went up 130%. This was from the low back in 2013. So if we're just being conservative and saying that when there's no clear direction in this for this stock longer term, it still does trade up, by the order of 70%. Now, when I see that 70-odd% coming in right at these highs here, I think that's just perfect because it tells me that there's some good upside potential in this stock. If not, somewhere between 60 and 70 or 80% could be realistic for ALD once it gets going again, if that bottom holds. Now, in saying that, if this month's low doesn't hold and it trades below this month's low, then we're waiting for lower lows. We're waiting for a better opportunity.
Well, it seems that the price level it's at now, it keeps hitting that level on the way up and stopping and on the way down and stopping. So I think that's a really very, very good stock to put into your portfolio. You got another one now, Phil?
I sure do. All right.
Playing it in turns, am I?
Yeah.
Yeah.
I've forgotten how to do this.
You're a bit rusty, are you?
Yeah, this one's AMP. Now, obviously, AMP has been a stock that has basically been, let's bring up the monthly chart, been falling, since listing, basically, since IPO, it's just been falling and falling and falling. And there have been times throughout history, even throughout the fall, you can see in 2003, where it found a nice little trend up to 2007. But I mean, most stocks did during the best bull run before the GFC, right? But then post that period again, it did find a base at $3.80 with some nice little spikes. But you've got to ask yourself the question, is this time different? Is this bottom different to what we experienced back in 2017? And there is some part of me that might think that it could be. And the reason I say that, in the short term, obviously, we're talking long term for AMP right now is a riskier game. But again, near lows are where you get some of the best risk reward type opportunities. So the fact that we're giving one of these patterns following a long downtrend, an accumulation type move, generally speaks to quite a bullish proposition long term. The longer we hold in this sideways motion and start to move up with some higher bases, potentially getting through $1.98, $2, then we're going to be starting to turn the corner in terms of breaking out into trend. So since basically 2022, you can clearly see that if this was truly a bearish market, and I'll move that away so you can see properly, then we would see the market exhibit what would be more of a bearish type structure, which is the lower highs and the lower lows. In fact, we're getting the opposite. We're holding above these lows since 2022. Now, we're talking post-COVID, we're talking in light of the Donald Trump correction that we've had recently. So I would argue with all of that coming through, the nature of these buys through here are relatively strong for me. It's different to what we've seen in the past. If we hold these levels in April, start to rise up, break the January 2025 high, then I would be, getting quite excited about this one, because if we are near lows, you can see the way it springboards out. You get very strong runs around these price levels at these significant lows, 150, coming through here, 46, and even in other examples, 60, 70. So keep a close eye.
So do you think it could be at like a 6 to 12 month proposition when the opportunity does come, or do you think that it could be a couple of years?
Look, I think this is purely technical right now. Price will dictate when that opportunity will come. If we just go back to that chart right now, that relationship, as I said, the most recent relationship, if anything, it's more volatile. So that's a bit of a plus. You're seeing more volatility on the buy side and downside, represented by the nature of these swings. They're much higher than what we've seen before. That to me spells more activity. And it's about that relationship. Right now, this is a bullish dominated relationship, if you will, because the sellers haven't been able to take out that previous low. If that scenario changes, then I change my mind. As long as we're longer bullish, shorter on the sell side, then it's about identifying your strategy, and you can use a multitude of tools and strategies that we do have here at Wealth Within. It's not just the trend line. That's one thing that we do show you, but there are multiple
there's
ways.
A better rule for this one.
Yeah, which we won't get into, but keep a very close eye.
Well, I like you talked about the $2 mark, because I think, that stock, I mean, I was there when it listed on the exchange, I've watched it the whole time going down and disappointing everybody. So I think that $2 mark is the critical area that would make me comfortable. Yeah. Because I think this is one of those stocks that you're more on the cautious side than the aggressive side from that point of view. But I'm sure we've got another stock, haven't we, Janine?
We do, and we've got AZJ, which is Horizon. Holdings, AZJ. And now look at that, you can see the decline all the way into this low here in April. So it hasn't really proven yet that it's stopped falling. And this could be an opportune time to be looking at it really. When a stock is in decline and it's been going sideways and then lets go, sometimes this last little bit of a let go, and I'll show you the line that I'm looking at, but once it's actually gone through these levels, sometimes it goes down for a few months and then hangs around, and then all of a sudden that can be the bit of a signal that then it turns back above this line again. And it's a really strong level, as you can see from that history going right back to February 2016, which is really helpful, because if it gets back above that line again, that's going to be something that you can sort of draw the line in the sand and say, right, I'm prepared to look at it now. But you've got to have your rules ready in advance, because it is in a trend. There's a trend down there, a nice decline, which forms part of that longer term trend. But one of the things that we've always taught people is when a stock is in a long-term decline or downtrend, it has to tick so many boxes before you put it in your portfolio. And this one hasn't ticked them yet, but it may do. So it's about being prepared.
Well, I mean, how many stocks outside of Telstra and AMP, keeps falling for 5 years or more? And that's what this stock has already done. So you're saying that the recent downward move through that level could be an exhaustion of the trend?
Could be. However, if it keeps going below this month's low, April's low, then of course it could go all the way back to its all-time low before we get that potential turnaround. But sometimes this happens. You can see that it actually hit its head on that line back in February. I'll just expand that chart up a bit so you can see that more clearly. But that outside bar pushed it all the way back up again, and then it just continued to fall below it. So, but these are volatile times and will really test any stock. So I'm appreciating that, but it's really once the dust settles that we'll see whether it rises again.
All right, well, there you have it from Janine. Now I'm going to go back to Phil for another rip of a stock.
Yes, we do have another one, which is Bank of Queensland. Now, this one is very interesting. Let's go to the charts and have a look. And the reason I say that is because unlike some of the major banks out there, Commonwealth and the others, you'll see Bank of Queensland has lagged a lot. And to me, that is quite an interesting scenario, especially given if we apply where this stock is sitting right now. We are at major levels of where the stock has gravitated towards the price, or basically been the level where it has sprung up from. And, dating back since November 2001, we're going past 20 years now.
Yeah.
We're back at the same levels from 20 years ago. All the while, throughout this period, we've seen 1, 2, 3, 4 very significant bull runs. Again, speaking to your point, you should embed this in your mind if you're a buy and holder as to why buy and hold in the long run with a lot of stocks, doesn't always add up as the best option. But anyway.
I'd even add the people that put DCA next to everything, dollar cost averaging. And they keep doing it. The drops away and they keep buying more. Why would you do it on a stock like this or any of those stocks that we've looked at?
Yeah.
You just wouldn't do it. It's suicide for your portfolio.
Yeah.
But I'm taking away your brilliant analysis. That's
all right. All right. Let's get back to the chart. Obviously, right now we are at that moment again. With Bank of Queensland, we're back at that $5.76 level. And what's quite interesting, I'll mention this a few times, obviously the way stocks break out of support or move in terms of their volatility really gives you an indication of whether this trend has legs or whether it's going to be short-lived. Now, although these trends, went for a few years, they didn't basically break out into the expansion that we saw in the 2000s. And there were some clues in that, and I'll speak to the example in 2009 and also 2020. Look how sharp the reaction to the buy side was in 2009, and it was met equally with the selling. Again in 2020, sharp buying following sharp selling, which was then followed back down in terms of the volatility. You look at this period through here, 2012, different scenario. Starts off by basing out, slowly gets legs and starts expanding as the stock's moving on up. Same through this period here. It doesn't really expand until a few legs up. Right now we're seeing more of a sustainable rise, and that's the exciting part for Bank of Queensland. We've had, since 2023, multiple opportunities for this stock to break lower in light of all the negative news around the world, and it's still uniformly making higher highs and higher lows. In fact, as it's doing that, it's giving these beautiful sidewaysy type agreements moves, which we call accumulation, that basically says, hey, you know what, sellers aren't going to take this any lower. Rather than fall, it goes sideways. And that energy compresses to only then break out into this very nice breakout that we've just seen, if we can go back to the chart, which has experienced this last month. It's taken out these highs through here, through accumulation, in trend. I would argue just applying a very nice momentum line, if we can grab it here, is your best level of support to trail it on the way up. And in terms of any resistance on the upside moving forward, well, to me, really, applying these lines through here, we've just broken it. So we are at a very interesting point for Bank of Queensland. I think upside potential definitely, if it can hold this kind of move. And in terms of how far it can go, look at that combination of the trend line with horizontal at $9.72. For the medium-term player, I think there might be an opportunity here.
Well, it's 20-30% in that, isn't it?
Yeah.
Really, and I think it's probably more longer term than that one, but right now it's quite good from that point of view. Now, I know, Janine, with that look in your eye, you've got one to top this one.
What look is that?
It's that look that I'm going to beat what Phil's doing.
No, it's not. All right, let's see if I can top
you're
that,
saying
seeing
you're
you've set the
competitive.
challenge. No. All right, let's see. Challenger Limited, Phil.
I gave you a good one, surely.
You did. You can see here, this has really been struggling though, and it could turn on a dime, and so just be mindful of that. However, it's been showing that this level is the strongest level for this stock, and the interesting thing about it is that when you do study with us, you will learn why that is so important. It's not just the natural levels that we're seeing there. There's a whole confluence of levels that appear at that point. So, and that's really what I think is exciting to me. Once this stock breaks above that level, the sky is the limit with it in terms of its upside, because you're talking about 85% to the all-time high. A lot of stocks might be struggling near really strong support levels, and then they come up, they hit it, and then they break down again. You've also got to watch for that. Like there will be signs that when it starts to move back up. And I just want to go to the weekly chart while we're talking about these levels, because it's really important to really appreciate the gravity of what has happened here with these sideways moves. We have seen weekly bars up that have been as strong as the one that we're seeing now. You know, there was some here coming up to the rise. We also saw it there. It's made numerous attempts to get through this level. The fact that it's actually fallen through this low here in 2023 to make a new low tells me that this is the best chance of any time for this stock to get going. So we've got to be watching it. So, but if you were a short-term trader, you might be wanting to take a risk earlier and get into it before it breaks through that high. But that's a strategy decision that's got to be congruent with the way that you want to trade. There's no point getting into a short-term trade if you in your heart know that you're not going to be wanting to trade it short-term and you want to trade it more medium-term. So that's where Phil was talking before about, you know, previous examples where he's shown these longer-term lines appearing on stocks and better off to wait. I don't think it's too big a ask to let it unfold to that level, given how many times it's hit that and pulled back. But to me, I think it's a good one to watch.
I think she's giving you a bit of a challenge there, Phil.
Yeah, that's a good one. And I mean, just on that point, if because you raised a very important point, even if you are looking to trade short term, you know, neglecting the longer term picture like we show here is, you know, a big danger sign, because just looking at the big picture, you can highlight those huge speed humps on a stock. Still trade it the way you want it, trade short term, trade your strategy, but don't neglect the big picture, because that's going to tell you where this stock really is going to be turning.
Well, can I say, and I'm being devil's advocate here, is people just automatically they think short term's the way to go and to make more money, where it's actually not necessarily the case. And I know myself talking to different people, that's like all my super fund, I just trade on monthly charts for the long term, and most of the people doing short term are not making as much money as I am. And I'm putting hardly any effort into it and making a lot more money because I'm thinking long term on that. So going short term is one of those myths that people think about, because we get so many emails and comments going, I want to do this short term, or what's your short term?
But it's horses for courses too. If someone wants short term because they want that income, then that's different, isn't it? It's a strategy decision, isn't it?
It's a strategy decision for income, not necessarily good for growth. And really, when you're building wealth, you want to compound your growth and build your growth. But often you spend a lot of time spinning your wheels, not getting too far. But anyway, I'm digressing. We've got great more stocks to come. I know we've got Flight Centre coming up and Orica coming up. But what's your next one, Phil?
All right, next we have Dyno Nobel. All right. Another interesting stock.
You sounded surprised.
I did. I forgot what stocks we had in here. But again, another one that, to me, you know, when we talk about stocks, to break it down very simply, there are three phases stocks are in. They're either expanding, they're contracting, or they're going sideways. That is it. There can't be any other way a stock can go. It's either up, down, or moving range bound.
Range bound.
Right now, the discussion here is this one's range bound. So the fact that we are range bound in terms of opportunity, and we're coming near the bottom end of that range. So that's why this is on our radar to be watching. Because as you can...
It's bizarre. I don't think I've ever seen a stock quite like that.
It's in the top 100 too.
No, I know.
But that's a 30
I don't think I've ever seen
range.
a chart that looks like that. It's just not... Yeah, it's bizarre, isn't it?
Yeah.
That is such a strong level where it's come down to.
And I mean, when you're looking at this from a trading strategy perspective, some of these markets, range-bound markets, can be amazing markets to trade because you've got very defined levels on the way up, on the way down, and maybe more conducive to what we spoke about before, more of an income type strategy, more so than a long-term growth. But hey, when there's repeatable patterns in the market, I mean, you take notice of it. So what does that mean for this stock moving forward? Obviously, if we apply those levels here, we're coming down to the lower end of where most of those runs got going, around $2. But again, I would always warrant that caution, as Janine said, it's trading with confirmation. And what do I mean by that? Each time it came through, you can see clear examples. Again, these are specific rules we teach, but I'll keep it quite basic. It tested the low, then went on the run. Again, it tested the low and then went on a run. Don't just be blatantly trying to buy these dips or levels because it could go further. And so right now we haven't seen that yet, but now's the time to watch. You don't want to be waiting for it to happen and then look 3 months later and go, I've missed the opportunity. Let's try and get in and then chase your tail all the way up.
Well, it is. It's about having a good strategy for it, because I know often people will see a stock drop, they go, it's cheap or it's a bargain. They don't actually test the actual low is in, which you're just talking about there, and they jump in and then realise afterwards that it's going to keep going sideways, or even for worse, keeps going down.
Yeah.
And then it's getting cheaper, as we were talking about earlier.
Well, we get that when people start the course and they start to learn how to read a chart, and then they realise what they've just bought.
You don't know what you don't know.
Yeah, well, if they bought something and it was falling away, they wouldn't understand where the important levels are for that particular stock and where it could turn.
No, they don't. But if you want to learn how to buy stocks the right way and make sure you're getting into them the right time and doing your money management properly and building your portfolio, get a copy of my book. It's free. We've paid for all the printing and everything else. I'm giving it to you for free. All you got to do is pay the shipping. Get over to our website, go into the store on our website, and you'll be able to purchase this book at wealthwithin.com.au. Now, Phil, I know we've got another. No, it's your turn, isn't it, Janine? Isn't it? No, is it Phil's turn? I'm lost.
Hang on, let me check the stock first and I'll tell you whether it's my turn.
I
think it's Phil's turn.
All right, I'll do Flight Centre. I don't mind. Look, give me a chart, I'll trade anything. Who cares? But again...
I do care.
Yeah. Well, thank you. This one's quite interesting, again, from the point of view, we're talking about stocks being at historical levels that they have found huge bases in the past. So to me, this is the exciting part. You're not going to get these opportunities forever on the market. They come once every so often. You can see in 2005 that it was there, in 2009, and now 2020. So 3 times from the history of this stock, you've had an opportunity to get in at levels where it's basically been the springboard for most major bull runs. We're there again.
Well, we are, but the thing is, we're talking about the last 4 or 5 years with COVID. The world's been in a recession that we're not allowed to talk about.
Yeah.
Imagine what's going to happen with this stock once the interest rates start dropping. I know Trump's telling, what's his name? Jerome Powell to reduce interest rates in the US. We're pretty much going to happen. Probably in May, we're going to have another interest rate drop. But once we get a bit of confidence in our market, people are going to start travelling.
Oh, yeah. Yeah, and what's quite interesting is that in light of everything that you just said, rather than the stock capitulate to all-time lows, it's actually held that level. And it's held that level quite strongly. In fact, it's gone sideways from 2020 COVID. And now, obviously, it's had another little fall off, but this is the important $11.51. It needs to hold through here, and not only hold through, give us those signs in terms of higher bases that we want to see. So right now, it is a little early, but nevertheless, you need to be watching this one for signs of a turnaround. And I would even argue applying some of these, if my mouse can work properly, some of these momentum lines through here, you've seen in history, just applying them throughout time, that they do really get you to get into the meat of most trends, rather than try to play in that questionable space, if you will, waiting for the market to turn around. So 4 clear examples of how following the trend line, as you mentioned in your book, will get you in at that opportune time, because that's what it's all about. A lot of people don't talk about the opportunity cost of your money. Just buying it around here, look how long you would have been sat in the stock with it going sideways. Knowing when to get in with precision, you're going to avoid that opportunity cost, meaning when you're in, you should be earning from it.
Well, it is. I mean, I get what you're talking about, because I know, that my book was written before the GFC, and we've been through the GFC, we've been through the COVID crash. etc. And the book keeps people out of those bad situations. So it's not just necessarily buying at the right time. It's more important than doing the right money management and getting out at the right time. And the book tells them how to avoid getting those bad periods.
Yep.
So to me, we've seen so many testimonials from people who've read the book, and I know you have.
Well, it was the update too that we did to it that really made people go, aha, given that included the GFC, didn't it?
Well, yeah, because I was written before the GFC, people would go, oh, well, it wouldn't have worked during the GFC. I went, yeah, it would. And they go, and then people said to me, prove it. So we went and proved it.
Yeah.
It worked. So to me, don't get caught in a crash if you've got the right skills, and it doesn't take much. All you need is a rule and a pencil and a copy of my book to read it. Now, I know this one's yours, Janine.
Okay. IGO is the next one. Now, this one's been on a long tear on the downside. So this to me spells opportunity when the iron ore stocks eventually start moving back up. It also has exposure to other areas. It's not just iron ore, but 81% fall back to this level. When stocks start getting around these levels, this is when often there can be a bounce back up. But I'd actually prefer, I know this sounds terrible for the stock, any existing shareholders, I'd actually prefer to see it come back down a little bit further to around this level and then move up, just because that's an even stronger level, I think, for IGO. But hey, it could turn down. That was the COVID low, so that's why I'm discounting that to a certain extent, because it wasn't a normal market movement. It was actually an orchestrated decline, and there were big fund managers shorting stocks during that time that pushed it. Now, even so, it's still a support level. We have to consider that. But I just think if you look at the angle, and it's really steep, so a lot of people might think, oh gosh, this is not a stock for me. And look, it's true. It's a higher risk stock to have in your portfolio, and you've got to look at it that way. But with higher risk can be higher reward if you're willing to take those sort of risks. So I'd be just sort of looking across here as a potential. Once it does start moving up, there's some potential support and resistance across here, but the stronger level is up around $8, and it may end up pushing back towards that level if it can get through the angle of this momentum coming down to the low here. But just looking shorter term, we need to have a look at IGO shorter term. As you can see, the lows keep getting lower at the moment. We haven't seen any sort of confirmation that the bottom's in yet, which can be the best time to be looking for these sort of stocks when they're coming to these support levels, to get in a bit earlier. But that doesn't mean just taking any rule. It means having a good set of rules that you've actually tested across the stock. Now, a trend line can often work really well on stocks that are trending stocks like this one is. You can see it moves up in this nice trending fashion, goes up, you follow the bouncing ball and off it goes. That's what you want to see on a stock that can give you a nice return, not just sort of this erratic moving up and down all over the place, whereas this stock doesn't seem to do that, even though it is a higher risk stock. But I'd actually like to see it break above the angle of that trend and come back down, test the low before an opportunity was had on this one. I can see there's some short-term resistance around this level, so be prepared to let a bit go off the bottom. Never be trying to get in on that bottom and worried about FOMO that you're missing out, because it's patience that will allow you to get your money and then keep it. And from here, if we springboard up to the next level, you've got sort of 50 to 70% from that level to get a better trade.
So this is, as you're talking about, I'm thinking this is getting to that area where it's just too cheap. When you've got good stocks getting at really, really historically low levels, the money's going to start flowing at some stage, isn't it? If it's a good stock, eventually will. And we've had material sector's been hit pretty hard over the last few years, not doing really well, but eventually they're going to start running. So to me, this is one of those stocks that is at the moment too cheap, but not yet ready to buy.
Well, the advantage of what we teach is it helps keep people safe and keep them out of stocks like this until the opportune time. Using a monthly chart, as you said before, if we go back to the monthly chart, we've got the same line appearing there at the moment, which will protect your capital.
All right, last one for you, Phil.
And last one for me is
Orica.
Orica, yes. But before Orica, on what you just said a second ago, a perfect example of unloved good companies that are now starting to find feet, Telstra.
People
were saying, it's never going to get going, it's never going to get going. It is flying at the moment.
It's flying at the moment.
So
It was frustrating. That's why I don't have any hair.
But now, Orica, again, talking about a stock like that, let's have a look here, because on the monthly chart, you'll see Orica has been, again, when we're talking about these real important historic price levels, well, we can tick the box because we mark our level here at around, now it could be a little bit higher, a little bit lower. It's not an exact level, but let's call it 1230, 1240. You can clearly see previous all-time high, find support in 2005, find support in 2008, 2016, and I don't need to continue on with the rest. You can clearly see how important this level is for Orica. Most recently, we've tested it. Now, what's quite interesting is we're moving again, albeit the volatility is much higher, but that's the thing with certain stocks. You'll see with Orica, it's not uncommon for this one to be more volatile than others. You can see even as time has gone on, throughout 1997, 98, the nature of the bars are much smaller, quite uniform, and then we get to somewhere around 2000. From 2000, the volatility has changed drastically on this stock. So that's something you've got to keep in mind if you are trading it, you know, to have strategies in place that do account and allow for heightened volatility, more so than it was a long time ago. But what it is respecting, and again, time and time again, we do see this, it's respecting the momentum line or the trend line on the way up. And you've got 1, 2, 3. Now, this is the fourth touch. The month isn't over yet. It's not closed. But right now, there is some buying picking it up. And as long as we're moving in trend, making higher highs and higher lows, then you've got to argue that we're in a bullish stance with Orica. The only, I guess, red light I would put on Orica right now, and it's a good one because we're coming into that crux point, and if I move it out through here or even tighten it up,
even picking up those other highs
picking up some of these highs through here, we're almost at that inflection point. And when you see stocks come into an inflection point, guess what? They're going to break out one way or the other.
Oh, yeah.
And if this one, as it's showing right now, the probability is weighted more to if it can break above this $19 on the next run, then I think we're going to go for a nice little run somewhere up to the $23, $24 mark.
Oh, look, I'd have to agree with you there, Phil. I wouldn't want to argue with you on that one. But I notice there's another stock in the workbook. Are we doing another stock? Or is this one of the Janine ones she throws in?
I've left it in, you can blame me on this one, I've left it in as extra in case, but if we've covered 10, I guess that's all we've got time for.
I know, just Janine likes to stick in 13 rather than 12.
That's right, Baker's doesn't.
All right, well, if you want the skills to analyse stocks just like you've seen tonight, visit our website, wealthwithin.com.au. Now, moving on, let's now get into our hot stock tip for the week. I'm going to go back to you for this one, Phil. What have we got?
All right, so the hot stock tip for this week is Perenti. Now let's get on your screen there. We've got the monthly chart. The reason I've gone into this one, obviously technically there's, as you can see, a lot of markings there that we're going to get into, but it did release some news this week. It did close a mine today, actually. So there is some market sensitive news out there which the share price isn't updated after today. So there will be volatility potentially. That doesn't change the fact of why we like this stock. So let's get back on there. Now, I've put some cons in terms of, announcements create volatility, obviously, and they can be positive or negative. But the fact that they closed the mine down was potential burdens for it. It could be loss of revenue, naturally. No new replacement contracts announced yet, so that might bode poorly for the share price. You're flipping the script, some potentials or positiveness from the recent announcement is that it shows discipline. When companies get rid of dead wood, underperforming assets, that's generally not such a bad thing. Okay, if they don't have something to replace it with, but if they do and they start cutting out all that dead wood, that's going to reflect in the balance sheet moving forward. So let's get back to that chart there for you. And the other one, obviously, they've agreed to sell a lot of those assets related to that mine. So that's already predetermined. I mean, there's not going to be issues with, tractors or whatever instruments they got left there to get rid of. So what's the share price telling us? That's the other important part. Now, in light of or prior to this news coming out today, the share price has actually been rising and rising quite well. And if we zoom back out big picture, you can see how important 40 to 60 cents has been throughout the history of this stock. We've recently come through there. And these green dots that I've marked here are just to represent that the market, even in light of significant falls, we fell 76% back in 2007. And guess what? In 2018, we basically mirrored the same type of price action, A, B, C, 3 waves down in volatile nature before then finding a high base and continuing. We're doing exactly that. We're still holding above that previous low, like in 2004. We've had that big correction around that 80% mark. We found a further higher base, another higher base, and now we're coming into one of those inflection points. So I think we're in a very interesting scenario with Perenti. It's a must watch, especially if it can get its head above $1.58 and close. In light of supposedly negative news, if price bucks that trend and continues higher, shows strength above here, I think for the more medium to longer term play, there could be a serious opportunity. And for the short term player, because I'm not going to...
So takeover, could it be takeover?
Could this company be a takeover target? Yeah, sure, I guess. Why not?
Well, I mean, I know the market loves good capital management on stock. So obviously what you're talking about is getting rid of deadwood. That's good capital management. So obviously we'll find out what's happening today. Once the market's going, we'll see what the market's reaction is, but I'm expecting it to be positive then.
Well, and you can almost tell prior, you know, you look at a chart prior to news coming out and you say, okay, is it up, down? And really, I mean, if there was any whiff of this really damaging the company, best bet it would have been sold off already, but we're not seeing that. In fact, if we just move back to that weekly chart, you can clearly see how important, you know, this trend line has been for the stock. In light of the recent world news, the market correction or crash, as some would call it, we've seen these two very distinct bars at around $1.20 or just under, finding support and the strength right now. So if we can basically move through this level here on the downside, oh, my mouse has gone through there, but if we can start breaking up above 130, 140 for the short-term player, I think you might get another leg up. This resembles a bit of that accumulation rather than full-blown downtrend like we saw back in May 2024.
It's interesting looking at the volume on that weekly, those big drops, the volume wasn't huge, was it? It was all fairly normal.
Non-existent, yeah.
That is an interesting play. So, but to me, I find this was an interesting stock I think this is the pick for the week.
Yeah.
What I've seen so far of all the stocks you've shown. But anyway, that is it for our weekly hot stock tip. Now, time to talk about all things market trending this week. Now, Janine, I know you've been doing some research. What's trending
exactly.
this week?
And this is really going to get a few people talking. Could Simandou be the Pilbara killer? WA's iron ore sector is facing a new competitor as Africa's giant Simandou mine in the African nation of Guinea is scheduled to come online at the end of the year. Now, we know Australia has a significant dependence on mining royalties. In December, the mid-year WA budget review 2024 revealed around $8 billion in revenue from iron ore royalties. Investors are wondering what this could mean for the WA economy and our favourite iron ore stocks.
Ooh, that sounds interesting. So is it high-grade iron ore?
Yes.
It is?
It
so
is.
It's comparable?
Yeah, it is comparable.
Wow.
Yep. We've got an interesting situation too because when you look at the states of Australia, obviously WA is the one splashing the cash. They're in a surplus and have been in recent years, whereas all other states have been in deficit. So the concern is whether that will tip the scales and cause an issue for the WA, royalties and the benefit that creates in their budget. But there's the other side of the camp is saying they don't think that it's an issue. They've talked through all sorts of scenarios. What could that mean for the property market in WA if this causes a bit of a disruption to WA iron ore and the cash that's coming back to Australia? Because China owns or has a stake in this new mine, so does Rio Tinto. So obviously it's going to be good for Rio Tinto to have that, but will that have a negative effect on WA as a whole? Now, a lot of commentators in the industry are saying, no, it's just a spit in the bucket sort of thing, to put it into Australian slang. But really what it means is that this production that comes out of WA is equivalent to something like 950 million, whereas we're talking about what's coming out of this mine in Guinea as being more around 60 million once they get it up to scratch, up to speed.
Okay.
So there's a big difference. So we're talking about 10% of what Australia's production is compared to this new mine, and that's why a lot of the commentators are saying you don't have to get too concerned about this at this point. It's more about global demand that's going to be more of an issue.
Well, it's also about how much it costs them to get the iron ore out of the ground. If it costs them more to get it out of the ground in Guinea, then it's probably not so much for us to worry about either.
Well, I'd say if Rio Tinto's got a stake in it, then it's got to be a good deal for them.
It's got to be a good deal for them. Anything else you want to talk about on that one?
Look, I mean, just that people have to think about the stocks because it can create opportunities in iron ore stocks, just the talk and the perception that there's going to be a change or an impact. And we need to look closely at the iron ore chart and keep an eye on that, and we're going to do that shortly, and also take a look at Rio. So they're on your screen.
There's a lot of talk at the moment around BHP and Rio and Fortescue because they haven't performed that well. We've been saying, you know, materials should start to take off. Obviously, we've got this Trump effect right now, which is making the market uncertain and not, I won't say unpredictable, but uncertain. There's the perception around the market is it's not doom and gloom, but it's all sit back and let's wait and see at the moment, which is stopping some of this stuff happening. So, and to me, it's all it is just delaying the inevitable. I think we're going to see a boom sometime soon in iron ore and obviously those big stocks. So it's really interesting for me what you're bringing out on that one. So I think let's watch this space anyway, but let's get back and take a look at some charts. Now we've got some more charts.
Yes, and look, I think that you made a couple of really good points there about all of that because it is a bit in flux. But when you look at the iron ore price, you can see that it's sort of steady as she goes. We've got this, sideways move that's happening, and this is what we've seen on a lot of stocks in the mining industry, consistently.
Is this an ETF or a stock?
No, this is iron ore. This is a world commodity pricing. Okay. So we're seeing.
I just wanted to make sure we're
this is not the whole history of the iron ore price, obviously. This just shows the history from 2007 coming forward, but it's more it's current in terms of what we need to look at. So we've seen this rise to the high here for the iron ore price in May 2021. That was after the COVID meltdown. We saw incredible increases in commodity prices, but then it's sort of settling down to what's natural, and I don't think that there's any huge concern, although if it takes out this level here, excuse me, in 91. September, 2024, then we could see it break this low as well, which would really send iron ore into a tailspin and could cause a lot of concern about what could happen to the iron ore price, because that occurred when the iron ore price went down into this low in 2015. There were mines with all sorts of question marks over them as to whether they were going to be productive or not, because they produced the iron ore for the same price as what the market was willing to pay. So the cost of production was much higher for some companies. Not for all. Our Aussie miners actually held up really well. They just dug down and they produced more to get higher revenues. But if we're looking at this low here in September 2024, I think that's the one we've got to keep a close eye on. And then moving across to Rio, we can see, as Dale was saying before, it's just caused this really inconsistency in BHP and Rio. It's not something that we've seen in the past like this before, which is really interesting to me from a charting point of view, but this is a really strong natural level for Rio. My concern right now is that Rio could end up somewhere closer to 90 cents, and that's the real issue. If the iron ore price goes south and conditions deteriorate around the world, then we could see Rio move south. But if it's got a chance of going up, this is it in terms of the support level that it's got. So we really need to see prices start moving up after the election and when's Trump's 90-day period end?
His probation.
Probation. When does that end?
He took over in January.
Yeah,
January, so.
But no, I mean, as in, when does that 90-day cooling off
the tariffs
end? Is it end of June?
Yeah, somewhere around there, yeah.
So that's really an important point, I think, for these mining stocks going forward. So, and we know that in July, the big fund managers reshuffle portfolios, and then later after that, they're heading into US reporting season. So that's a big time, I think, for potential turning points for a lot of stocks.
Well, I think the whole year is a real interesting year that we've got so many different challenges. because we really haven't seen a bull market yet, have we? In either really in the US or here or even around the world. The last 5 years has been one of uncertainty with COVID and all the after effects of that. And I think once we start getting, there hasn't been a lot of development or countries really pushing ahead strongly, and we haven't seen any of that. And if we start to see that and things get back to what was normal, I think you're going to see these sorts of stocks really take off like a rocket.
That's what we're hoping, and usually happens in the last part of the cycle.
Yeah, it does.
As we know, historically, we get the biggest boom the last few years, so that's potentially could still be ahead into 2026. We may see that big rise at the end of the year, second half of 2025 and into 2026.
So you picked Rio over BHP because I know BHP.
Well, Rio's involved in this project in Guinea, that's one thing, but the chart's also neater, I think, from a technical point of view, in terms of its support level, how far it's come back from the high. I think that's neater from that point of view. From a longer term investor's point of view, there are clearer lines for buying this stock than, say, BHP, but BHP is probably better for a shorter term play, I think.
All right, we've got lots of emails to answer, so stay watching. Now, moving on, let's jump into more stocks and answer your questions. Now, Rajib writes, I have substantial PointsBet or PBH shares with a purchase price of around $1.65. There is a takeover bid from 2 companies for PBH. What happens is takeover bid goes through. I think the proposal is around $1.06 a share. I'll let you go, Phil, because Jane's been doing all the talking of late.
Yeah, all right. So what I wanted to do was actually bring up that actual article where it spoke about the takeover, if that's okay. So on your screen right now, we do have it where it says PointsBet here accepted a $353 million Mixi takeover bid despite rival Bluebet's higher offer. And as we go through this article, you'll see that the Japanese sports and entertainment group Mixi outbid the local betting firm Bluebet and won the contract, and it will receive a cash consideration of $1.06 per share. So, you know, that's basically what's happening with that scenario there. In terms of the question Rajib has, the purchase price was $1.65. Now, I'm not sure, he's obviously purchased it back in, if I can grab that there, he's purchased it back as the stock was falling back in June 2023. So to me, the bigger question is, you know, was this the best place to be getting this stock? It looks like a lot of bottom picking with no real confirmation on the monthly chart. And what followed was that significant correction. Now, if the $1.06 cash consideration goes through, I mean, maybe get your thoughts on this in terms of, because my mind's all jumbled at the moment, but it might not, he might not get back to what he's paid for.
Is it really?
So,
because you'd think if this was out, it would have jumped, and it really hasn't done too much, has it?
No.
So that means that the market's not saying too much about PointsBet at the moment. I think it's, I think I would stay out of it at the moment.
Yeah, unfortunately his hands are tied right now. He's just got to wait and see what deal does go through, I guess. And
when are the dates for it to happen?
I'm not sure. I haven't confirmed on the...
I mean, that's something that he can do, isn't it?
Yeah.
It's a good question. You've got to have that schedule in front of you. As soon as you have the dates, you've got to keep those dates in front of you and just watch, because in these situations, when some other company has made a bid, even if the board accepts the current bidder, there's sometimes a potential for another company to come out and say that they are going to make another bid.
Well, it says the other company's already bid higher, so there's some reason that they've accepted a lower offer.
Deal.
There's some sort of deal going on, so I'd be reading that, and whatever that is, I don't know because I haven't read it.
Yeah.
But I'd be looking at that schedule and saying, well, what are the dates? Because at the moment he's probably got his hands tied, as you said, Phil.
Yeah.
What do I do? I probably wouldn't have been in the stock. Well, actually, I know I wouldn't have been in the stock, but does he continue to hold afterwards?
Yeah, look, it'll depend on, you know, what the new offer he gets and whether he's willing to go through with that or not. But to me, the bigger concern and question was, like you just said, was that the best place to get in? And
so you're saying the best thing he can do now is use it as a learning experience?
Absolutely, yeah, absolutely. And identify that, hey, just because the stock, as we've shown, you know, all throughout the topic tonight, even though stocks do look cheap and at some point they will reverse, trying to play reversals, you need a much more higher degree of skills than playing with a trend. As you said, through 2003 to 2007, everyone was a genius in the bull market.
Well, they were telling us.
close your eyes and pick a stock and, you're a great trader. But identifying these significant turning points, that's where the skill level comes in if you're willing to play this kind of game, which is what he seemed to be doing. And sometimes you get caught.
All right, well, we've got a cracker of an email coming up right now. Each one's from Tom. He says, I'm a new investor and chose to start my portfolio with VGS, BHP and Macquarie Group right as the market crashed 2 weeks ago. Since then, I've continued to do my daily research and have learnt a lot more through resources such as Wealth Within. I invested around $1,500 in each stock with the intent to dollar cost average over the next 10 to 20 years. Am I better off consolidating my BHP and Macquarie shares and putting the capital into an ETF such as the A200 whilst I'm at the start of my journey? Or is it okay to hold these shares as well and start investing in an ASX top 200 ETF to capture the rest of the Aussie market? I'm going to go to you, Janine, because I know you're champing at the bit to give him great advice.
Look, I mean, that's a tough one, isn't it? Because he's asking about whether he should put his money into ETFs or whether to put his money into top 20. We always say top 20, so to me that's a no-brainer rather than the ETF. But you can have some ETFs in a portfolio of good blue chip stocks as well. So you're not precluded. There's not one right way only of doing it, although Dale might tell you that.
Yeah, I will. I will. I want to start an argument, don't you? But why buy an A200 ETF? It makes zero sense to me. If you've got the banks and the finance companies as half of the market, just buy them. You don't need an ETF at the same time.
Come in, Spinner.
I guess the part that we've skipped over is the fact that he planned on dollar cost averaging over the next 20 years.
Yeah. That's right.
So
look, just because you got in just before the market fell over a little bit is irrelevant. You just got in a little bit too early. That's a learning curve. It doesn't mean you need to change your strategy. So whatever the strategy was beforehand, have a look at that, because I know we've got some. But grab my book. If you're new to trading or new to investing, grab it. It's free. You just got to pay the shipping. So head over to the website. If you're using our stuff, buy the book. It'll fix everything. It'll tell you how to get the right stocks, how to pick them, how to do the money management, all your stop losses. Everything you need to know is right in the book. So just whatever it is, the postage, I don't know. We're giving you the book for free, so just get it. Go to our website and get it. But it's a great question. He's got 3 or 4 questions in there. Don't dollar cost average. The book will teach you not to do that. But getting in some good stocks. So my mind
and not buying index ETFs.
Yeah, but I wouldn't sort of consolidate, BHP and Macquarie. Now, BHP is probably the wrong choice at this point in time. Macquarie, not so much. But what are better stocks for him to have right now?
Probably banks, I would say, are really good stocks to have, the big 4.
Yep.
I like that Bank of Queensland that you had in the list earlier. I think that looks really good.
I was going to say which bank, but you're probably not going to say CommBank. You're probably going to say Westpac or ANZ.
Well, look, if you've got a portfolio of 12 stocks and the market starts to turn around again, you could have 3 or 4 stocks that are bank stocks or financial stocks.
Any for you, Phil?
Yeah, look, the idea behind looking at that ETF 200 ETF, you obviously want a broad, allocation of the market. But you have to also accept the fact that if you are going to be getting the ETF, you've got to give up a lot of potential gains rather than buying specific stocks. And just like you said, I'd have a little bit of materials, I'd have some financials because they're the 2 biggest sectors on our market. I'd even pick up some energy, but I would put that with a caveat that you need to know when you're buying. Right? Don't just buy these falls. But those 3 sectors are the 3 biggest, maybe even some healthcare, some big healthcare players.
You're not saying Telstra after the big boost?
Well, there you go. Yes, Telstra too.
Yeah. Great question. Thank you for that one. Now, John's email is next. He said, I'd love to hear your thoughts on Drone Shield. It's currently hitting its head on the resistance at $1.14. Also, it looks to have a solid bottom at around 83 cents. My thoughts are if it closes over the $1.14 mark, it could be worth a buy with the next potential resistance at $1.45 and almost 30% upside on that. And if it manages to claim that level, I don't see much in its way to challenge the all-time high. My rules are buy if it closes over $1.14 and set a trailing stop loss on the 150-day moving average or even the 200-day moving average. I'm going to go to you, Phil.
Yep, Drone Shield. This one, let's see if lightning can strike twice.
Well, I know you spoke about it. That was your hot stock a while back.
Yeah, it was. And I mean, DroneShield released earnings today as well. That's another one that reported. So that's interesting to see how that situation comes out. Obviously, there'll be more volatility, but I like your idea. Let's go to the chart and have a look there for you, because as this stock was running through this period, and let's bring up the weekly chart because there's not that much data on it. But as we saw these runs, again, textbook what you see at the end of trends, that euphoric buying. And we had so many people looking at it, ringing into the show at $2.30 going, oh, I think I want to get in now. I think it's a good buy. And we were saying, no, mate, the opportunity's gone. Yeah. Because of the nature of this rise, it was very evident. What happened was the pullback. And now we're basically moving back to, if I can apply this trend line, to the more, this mouse today, Dale, I think it's time to throw it in the bin. Throw it in the bin after today.
Tradesman doesn't blame his tool.
No, he doesn't. But we're moving more to the, I guess, sustainable.
I'm happy to share.
Oh, thank you. I appreciate it. Yeah. The sustainable rate of rise, which is what the stock came back to in January 2025. So I totally agree with all of his analysis. In light of obviously the earnings coming through, that might shake things up. But we take that away. If we do break above $1.19 through here, that does give another nice little textbook signal to get higher. $1.50 or $1.40, he said, basically where the next resistance is. Yes. I agree with that also. Will it be strong resistance? I don't think it's as strong as for it not to warrant a potential play. Because if this one takes off, it might just blast through that level. As you can see, as it's running up through this next bout higher, it's extending in each leg. So the first leg was to January 25. This second leg is higher than the first and longer. And already we've started off basically the start of the third leg with a huge bullish bar last week. So if we continue on and, hello, with the news like this the week before and the market releasing today, we could see a big, strong run up. So I like the idea with DroneShield moving up over the next, weeks, months, as long as this trend holds. But if you do start to see that euphoric price action, remember what happened back in April.
Yeah, Mark Phil's words. Absolutely Mark Phil's words. Anyway, Dino is next and he writes, wanting your thoughts on XEJ or on the XEJ. There seems to be some opportunity in the overall index based on this chart if it doesn't break the low. There seems to be a small kangaroo tail on the recent close on the chart, which we saw a similar pattern in January 2016 and March 2020. So would you be looking to go long on the XCJ in CFDs and also specific stocks for direct investment? Janine.
I think the key words there are looking to go long. I think looking, yes, but going long right now, no. That's my short answer.
Why?
For it.
Because it's been the worst performing sector this month?
Well, just look at the chart. I mean, that's telling you everything, isn't it?
That's a good start.
It's still been in free fall. There's no real evidence that it's actually moving up yet. Although, like we have been talking about stocks today that have been falling and look out for levels where they might find support. You've identified a really important level, so congratulations on that. It could be a point where energy starts to turn around from, and Pedro would get really excited about this, seeing any signs of potential turnaround. But looking at it, it's very early days at this stage. Obviously for last week, seeing the close up high on that weekly bar as a starting point. Yes, looking, but not buying because the trend is still clearly down. So it's going to take some way to get an opportunity coming in here because it's got a long way to rise before it even breaks the angle of that trend. Then you've got to consider that you've got all sorts of resistance around these levels. Could it get back up to those levels? I mean, it could if you're a shorter term trader trying to pick a bottom at taking the highest risk opportunity. There's a range, so it might hit its head here. There's the trend line. There's too many things here for it to cause resistance and stop the run up at around 8,000. So I'd just be wanting to see what it does when it gets to around 8,000, and hopefully it can come back, do a test, and then take off again, and we might have something.
Oh, I don't even know what a kangaroo tail is. Have you ever heard of that?
No.
I've heard of it. But anyway, the thing that you're saying is really don't go long on something that's going down.
Yes.
And that's the thing is what you were saying a bit earlier, Phil, is trade on confirmation, not speculation. There's nothing on that chart to suggest, as Janine was saying, that this thing has stopped falling. It may, but you don't go long in that, especially not on a leverage position with the CFD from that point of view. So
Actually, that's a really important point in itself.
well, it is. You go short in stocks that are falling and go long in stocks that are going up. You don't do the opposite. You don't hope that it's going to flip and turn around. That just doesn't happen, especially not on a leverage position. Any stocks in the energy sector that you like at all?
To be honest, they've all been disappointing. Woolworths, Viva, Karoon, you name it, they've all looked like they were going to base out a few months ago and then just blown through on these recent...
Woodside,
sorry. Santos. No, nothing yet.
All right, Dino, no good news from these two anyway, but let's move on to Akshay, who writes, could you provide your thoughts on NVO? I'm not in this stock and wanting to take a position. I've never heard of this stock, guys. Have you got it?
No, I'm not before today, but...
Okay. I'm glad I'm not alone then.
Yeah.
Kangaroo tails on a stock I've never heard of.
Yeah. It's, am I looking after this one?
Yeah.
Yes, you are.
All right, so let's look at the chart on NVO. Now, it's not been around for long, and it's probably a reason why you haven't heard about it. Since September 2023 was when it listed, and it's been bad news ever since. Now, I'm going to say something here which might be a little bit interesting or...
A bit controversial.
But I don't hate the idea. And the reason I don't hate the idea right now is because it has stopped falling.
Yes.
If we measure what's done since September 2023 to August, very clear, defined downtrend. And if I go on the weekly chart, let's just start there because you can see things much easier. But lower highs, lower lows, lower highs, lower lows. One thing I will add there for you, was it Ashkay?
Ashkay.
This stock does look very illiquid. You can clearly see that on some weeks it's only traded at one price level for the whole week. So I would argue be very, very careful with the type of position you're trying to enact on this stock. Go look at the market depth, look at the liquidity, and make sure there are levels filled and you're able to transact to get in and out at the prices you want. If you cannot do that, then there is a whole added layer of risk that you do need to understand and accept. That you probably don't want to accept. But let's get back to the chart in terms of what it's actually doing. If I take away all the liquidity issues that this stock represents and look at it purely from a price point of view, it's broken just recently through this long-term downtrend line. It's based out. I actually don't mind the opportunity from a short to medium term perspective because we've tested the low. Very different to a stock in free fall. We've had 1, 2, 3, 4, 5 opportunities to test the low, given a higher base, which we haven't seen literally all throughout this fall through here. That's the first sign of a higher base. In fact, we've got 2. We've taken out the previous high and closed. Last week wasn't great, but you're going to see this. Around lows, you're going to see wild price action, especially with a liquid stock. So unless you're an experienced trader and you do know how to read the depth and you can formulate strategies to ride this wild volatility, or you've seen this type of price action before, I would say be very careful.
Well, I'm glad you actually said that because his email says, I'm not in the stock looking to get in it, but he's not telling us why. So if he'd said, I've done my research and this and EPS dividend yields, blah, 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 and gave us, this is why, can you give us your technical view? I'd be much more comfortable. But I don't know, is he getting into it? But because you've seen the volume on that, it's not increasing on the upside when it goes up. It's not increasing at all.
No.
So I'm glad you said that you need to be somebody who is educated and a good trader. Unless you can manage that volatility, you're going to be stung, or you might be stuck in something that's going sideways forever and a day.
Yeah. If I had to put this on the scale, is this a good trade? On the low end of the scale.
It's a low end probability of the scale? Or?
Yeah, low end probability. Is it an attractive risk to reward play? Yes.
For you or for somebody who's more of a beginner?
Just for somebody with experience.
Okay.
Because you'll have to know when to get in and when to get out and identify as it's turning quickly. But you might not even be able to do that with how liquid this stock is.
Okay, there you have it. Cool. Well, I'm glad you said all that anyway. Well, now Chris has emailed in and he said, this morning I noticed in the course of sales for CSL that large positions were being traded pre-open well above the current price action during open hours. Now, I know you guys normally focus on the technical side, but I found this interesting. Is it funds trading or sharing risk in certain positions? Now, this one's perfect for you, Janine, isn't it?
Yeah, and I mean,
You see it all the time.
the answer is yes. I mean, there are institutions trading in the pre-open and the auction. So they're the ones who are occupying that space, who are going to be moving money around and can more easily do it, because let's face it, in a market where you've got algos dominating, that's algorithms dominating the market activity, then people are not putting huge positions into the market without working them into the market across the day, because otherwise that would cause the share price to jump. So that's where the pre-open and the auction give an advantage to institutions to be able to do that. But great observation that you've made in picking that up.
But why are they doing it?
Well, just because of it's easy. You mean why is there an opportunity, or why is it a functionality thing?
Why is it a functionality thing? Obviously, if I'm a big fund, let's
I
say
thought I
big-
just explained that.
Well, yeah.
Jeez.
She just wants to give me a hard time, doesn't she?
Yeah.
She's really,
She missed you.
yeah. Should we be worried about, or should normal retail investors be worried about that stuff?
No.
Okay.
I think it's more when a retail investor picks that up, they're thinking, should I be doing that? It's more about the FOMO and is there an opportunity here? But in reality, no. Let the chart tell you what's going to happen. Did that answer your question better?
Yeah, it did.
Because you see that, I can see from his point of view, you see that big number and you think, oh my God, 8 million shares being traded on the pre-market. What do they know? What's about to happen? But that might just be 8 million of a $100 million position. So meaning not much in the grand scheme of things.
Yeah.
So I would, yeah.
Thank you, Phil, for explaining it properly for me anyway. Now remember to send your questions to info@wealthwithin.com.au and we'll answer them in next week's show. Now, if you want to watch more hot stock picks from us, check out our Do You Sell the 7 Biggest ASX Stocks in May video.